Welcome everybody. Thank you for joining us today to learn a little bit more about how you can get a better handle on the challenges with insurance compliance. I am Lauren Skinner Johnson and I will be moderating today's event. A couple of quick housekeeping items. If you've been on a Convey webinar before, this will be a reminder. If you're brand new, just want to let you know that everyone is on mute for the duration of today's event. But we do ask that you participate by putting your questions into the chat window or the Q&A window, and we'll be able to address those at the Q&A session at the end of today's event. And you can put those questions in at any time throughout the presentation. Also, you'll see on your screen right now the Compliant Connect C2 Summit is Convey's annual tax and regulatory conference. I want to remind you to take advantage of early bird discounts. You can get up to $200 off a 3-day pass or $150 off a 2-day pass. The conference will start on Sunday, September 23rd in Dallas, Texas, and go through Tuesday, September 25th. Convey's Summit is a live tax information reporting seminar that includes a half day of Convey solution training and then 2 full days of regulatory and compliance sessions. And with that, I'd like to introduce our speaker for today, Jeff Cronin, who is Vice President of Product Strategy at Convey. Welcome, Jeff.
Thank you, Lauren. Well, I'd like to welcome everyone today to the session. We are going to spend a few minutes talking over an overview of insurance-related issues and spend a little bit more time going into more detail on specifically state reporting, withholding management, B-notice management, and we'll work to make sure we have some time at the end to do questions and answers from the audience. As an overview, one of the big challenges that we have with reporting in the insurance industry is that you have a lot of complex regulations. Unlike many types of reporting, you have information reporting not just at the federal level, but you have information reporting to track in 52 individual state jurisdictions, and in some cases even down to the locality level for not just where you do information reporting in 1099 transmittals and filing, but you also have withholding requirements where you have to keep track of what your withholding obligations are, as well as what the process for each jurisdiction is for remitting those funds, delivering money to them, reporting what you delivered, and then reconciling that to what you eventually post on an information return. In addition to that, you have, especially in certain insurance industry verticals, health insurance, for example, for providers, you have issues with B notices and penalty notices, and really just dealing with identity issues around who is providing you information, whether or not their name and their TIN actually match what IRS has on file. Those are all issues that have to be resolved and really make your situation much more complicated than you would prefer it to be. So obviously one of the things that we believe can help here is to take all of that complexity and move those compliance requirements up into the cloud. And so actually allow a cloud provider in a software as a service environment handle all of the compliance complexity for all of the jurisdictions that we're dealing with. So the first subject that we're going to go through in a little bit more detail is state reporting. At the state level, you're looking at a very large hodgepodge of reporting requirements. Some states have no filing requirements for reporting. Some states have partial requirements for reporting. Some states participate in the Consolidated Federal State Program. Some states do not. And actually, in some cases, in for filing requirements, you have special requirements beyond the combined federal state reporting environment. You'll find that it actually can be very complicated to keep track of not just which jurisdictions you need to file in, but also what that particular filing requirement is. Most frequently, when we engage with a client, we find that they have been doing combined federal state or CFS reporting as a part of their normal business process, and requirements, but aren't completely handling all of those requirements. For example, the Nebraska requirement, Nebraska officially supports the CFS program, but Nebraska also has some extensions to the IRS filing that produce a file that's not fully compatible with the IRS. And so in some cases, you will end up having to file directly in Nebraska, depending on how the underlying data sits. So keeping track of all of this complexity is very difficult. You have a research responsibility, and then you have an automation and compliance responsibility. Back to our original theme, we do think that you should be looking for some sort of solution that allows you to have this information automatically available to you. I'm going to jump over to withholding management next. The framework we use for talking about withholding and withholding management is really what we call the 3 R's. Remittance, which is moving funds, reporting, and reconciliation. I'll spend a minute talking about remittance first. One of the challenges with the remittance process is that, in the jurisdictions where you have reporting responsibilities, you'll have to do daily payments. You'll need a daily payment calendar. And one of the things a daily payment calendar does for you is actually letting you know for each jurisdiction where you have funds outstanding, how much do you need to pay to that jurisdiction on each day. One of the complexities here is that oftentimes, in the state of California, for example, the state of California follows the federal rule on remittance. The federal rule is that if you have over $100,000 in outstanding remittance that's due, you have to actually deposit those funds on the very next day. With next day payment processing, that's great if you have $100,000 every day, but very frequently you'll have days where you have under the threshold, and your actual payment schedule will vary depending on the outstanding balances that you need to remit to the agency. And so that can run a lot of complication. It can make it difficult. What we see a lot of people do in that situation is default their payment process to running every day without regard to whether they have an obligation on that particular day. The point of an automated system for remittance is you should have a daily calendar that automatically keeps track of your outstanding liability and automatically tells you what you need to remit on any given day. One of the nice things about a daily calendar is it will put the state and the federal remittances in one place. So you have one place to go every day to look at what you need to remit and handle all of your payments for that day, and then you move on to the next one. And then, it needs to track over 40 jurisdictions that require some kind of payment. Next is reporting. So now you've actually given all that money to the regulatory agencies. The next conversation you need to have is, so I paid $100,000 to Massachusetts, and I paid $50,000 to Minnesota, and I paid $1 million to California. What's next? Each of those jurisdictions has a different reporting calendar that requires you to file a particular form with that regulatory agency, reporting to them what it is that you remitted in that period. So I gave $1 million to California. How does that break out? For a state, again, the situation here on the reporting side is you have a federal reporting schedule, and you have state reporting schedules in each of 40 separate jurisdictions. And so when you have a withholding process internally, or if you are using a solution like Convey's, you need to be looking for a solution that will give you a reporting calendar along with your remittance calendar. Every day you go in, you say, here's what I need to pay, and you can also go in and say, here's the report I need to file in the following locations. So you know that you're in compliance on the reporting side as well as on the remittance side throughout the year, not just in January. And the final thing that goes on is reconciliation. So now on a periodic basis, you have to reconcile what you've reported, what you've remitted, and actually by the end of the year, what was on 1099 forms that were filed with the regulatory agency. Again, you're looking at a situation where you have a reconciliation calendar that will help you. Most reconciliations, there's a couple of examples of monthlies, but most reconciliations are done quarterly and annually. And then you file that reconciliation with the agency to reconcile what's been reported and what's been remitted. And that's also your opportunity to true up any difference. If I'm under withheld and I haven't paid the withholding and I need to remit more, is my chance to true up on a quarterly basis what my individual reconciliation said I should have paid. And then in some states they actually have an electronic transmittal for reconciliation in addition to a paper form where you have to transmit to them and say the details of how you actually withheld and what accounts was get deposited to on the regulatory agency side. So the third topic I want to cover is B notices. At the end of any given tax season and you're done filing, you have the possibility of having a situation where what you produced and filed with the Internal Revenue Service is different than what they expected. And actually we've heard this year that we've started to see some CP 2100 files, which we typically don't see until the fall. We've actually started to see them come out as a couple of companies have gotten them now. So as the CP 2100, which is a file you get from the IRS that tells you that you filed a 1099 return for an individual that the IRS does not have record of in the way that you filed it. And it's very typically that the name and the taxpayer identification number, TIN, don't match the expected value on file with the Internal Revenue Service. They will then send something called a B notice out to you. The real problem here is you've got an identity management problem. From the IRS's perspective, you do not have the proper identification for the person that you made a payment to. There are two ways to talk about this. There are proactive ways to fix that problem before the IRS tells you about it, and there are reactive ways to fix that problem after the IRS tells you about it. And we're going to talk a little bit about both in the process of going through the B notice management. From a proactive standpoint, if you're not using the IRS bulk TIN matching service or using a bulk TIN matching service from a third-party provider, you really should start taking that on. You start off with matching your database. You take an extract of everybody that you expect to pay that year, and you go out and you bounce it up against a database that says these are valid names and TINs and these are invalid names and TINs. At that time, you're in a situation where you actually know what your challenge is inside of your organization. And you do this before you receive a B notice, because when you receive a B notice, you're much more constrained as to what you're allowed to do in collecting response information. And so with the proactive TIN match, you can only match up to 100,000 records at a time. If you have more than 100,000 individuals that you are paying, then you will need to split that file up into pieces or to work with a service that automatically splits it for you. It identifies bad information and allows you to go through the rules so you know how to correct it. And there are no rules. At this point, if you're doing this proactively, you do not have to follow the IRS B notice solicitation rules. You are free. We have some customers who are free to use a postcard solicitation. They actually mail a postcard as opposed to doing a W-8, W-9 mailing. And rather than getting a W-9 back and scanning it, they send a postcard, and that postcard actually has a URL, And that client then goes to a TIN portal where they can key in their information, and then we will, in the case of they're using Convey's TIN portal, will automatically verify if the name and TIN that they've entered is right, matches the expected value, or if it's still invalid, and then collect cleanup information across the board that way without being constrained to doing it specifically on paper process. So the solicitation can be everything from an email to a postcard. If you want to, you can send a W-9. Your response process can be done by fax, by mail, by website, by customer service rep. You can give them a phone number to call to correct those responses. And then data updates can happen directly inside your source systems, and all of that happens prior to you doing an IRS transmittal and being subject to a B notice in the B notice process where you're constrained in how you respond. Next are reactive solicitations. So one of the first things that we see happens commonly is that you have accounts on your database that have name and TIN combinations that the IRS considers to be duplicates. And that will frequently allow you to catch some things where you double reported or you double filed and the IRS didn't realize it. For example, the duplicate name TIN combinations, because the IRS uses a short name on verification, which is the first 5 characters of a last name for the name TIN verification, an individual with the same TIN showing up on 2 records with 2 different short names, 2 different last names, can cause a B notice. And so it's very worthwhile to verify first what your duplicate environment looks like, and then go through a process of doing reactive solicitations. Once you are under a B notice, and once you receive that CP 2100 mailing from the IRS telling you these are the following organizations you have to solicit or individuals you have to solicit, at that point you are on a clock. You have 15 business days to send the official B notice solicitation mailing package. It's a cover letter plus a W-9. After that, the individual has 15 business days in which to respond. After that 15 days are up, 30 business days in total. If you do not have in hand corrected information, a signed W-9 is adequate, but if you have no response at all, or if they sent you back an incomplete W-9, you are then obliged to immediately begin backup withholding. That backup withholding, if you would for any missing TIN or any missing recipient information, you have to do that immediately. If they submit a match back to you, if they submit completed documentation back to you, and you use a system to verify if it's both TIN matched, that's fine. You are at that point still, because you have a completed W-9 in your hands, you are not required to begin backup withholding, even though you may be in a situation where you know that taxpayer information from that individual is incomplete. You need to file your W-9 so you have it available for completing the abatement process to verify that you've done your due diligence, you've made a good attempt to collect the information, and you were unable to do so. Really, the process here, there are 4 pieces to it. The foundation to all B notice management is to avoid them in the first place. The best way to deal with them is to put together a proactive program that allows you to verify what your current environment looks like, what your current name TIN situation is, and for you to put together a process that inexpensively corrects any data you have on file. And that's really why we recommend you look at doing this early before you get to be under a B notice. Because early in that process cycle, as I mentioned, you can use email or postcards or phone programs to inexpensively reach out to your customers or your vendors and collect information so that you don't end up in a situation where you're required to mail something. On the second step, if you're not doing so already, take advantage of the IRS TIN matching program, or hire a vendor who will do it for you. The IRS TIN matching program is free if you do it yourself, a vendor, and you can manage the technical integration components. Vendors will charge you something for it, but typically not very much. And it will allow you to verify your recipient environment and know exactly where you stand before the IRS tells you where you stand. Again, it's always better for you to know where you are before the government knows where you are. The next step is to document everything. So as you go through the process, you should have a process flow documented about how you're going to handle the B notices once you're under a regulatory requirement. You should make sure to keep scanned, either paper, scanned, via fax or PDF copies of the signed W-9 forms, and use that information in support of any sort of regulatory conversation with the service after you receive your notice. The supporting documentation is your primary way to receive, to get the IRS to agree that you are eligible to abate a penalty. So having that supporting documentation is key. Final step is tools and automation. So applying automated tools to managing this cycle, one of the keys in this conversation, if you sit through our full 1-hour B-Notice webinar, is that you need to keep track of which notice package you need to send, and this is the first time you've had them or second time. Those things are not something the IRS will tell you, and they're something you need to maintain on your own. And so the application of tools and automation to this process are key to your overall success. In addition to that, even being able to use something like the TIN matching program. The IRS TIN matching program itself requires that you have some kind of automated process to split the bulk TIN match file into chunks so you don't exceed the 100,000 unit threshold. So in summary, for state filing, don't rely on CFS alone. The states are getting serious about people who are failing to file or who they view as being underreported. So you need to look for a solution at the state level that provides you with CFS as well as direct filing capabilities. Step number 2, you really need a tool set to manage withholding, especially if you're in a situation where you have complex state withholding. If you're in the life insurance industry, if you're in retirement processing, and you have a large amount of state reporting that you have to deal with, this situation can get out of control very quickly. We have one client who started, before working with us, had actually started off with over 80 people working on the state compliance component. And that's not a situation you can regularly handle manually. It's not scalable, and you run the risk of ending up in a serious underwithholding penalty situation. And number 3, you really need to get ahead of your TIN compliance if you can. And there's really, at this point, no real reason you shouldn't be able to. There are many options on the market, ranging from if you have internal resource, if you have programming capacity, you can do it for free by signing up with the IRS and doing some programming work inside, and some inexpensive options to buy in the marketplace. So now we're going to move on to questions and answers. The first question we have is, what's the penalty for missing the same day $100,000 deposit requirement on a 945? So unfortunately, the answer to that question is it depends on how much money they think you're short. When you look at the way that penalties are calculated for withholding remittance failures, it's actually as a percentage of the under withholding. And so if I'm under withheld by, we had one client, we had one situation, we had a client who came to us, and they were looking at a withholding penalty from the IRS over $250,000. And it all stemmed from a situation where they missed a withholding payment in February, and they ended up in an under withheld position for the remainder of the year because they never remedied that situation. And so the IRS calculates as a daily percentage of your under withheld amount. And so a relatively small problem early in the year can cascade into a very large penalty over time, because they just, the IRS applies a percentage to your under withheld balance daily. So, when you look through how that works, that requires a pretty substantial investment. And that same problem exists at the state level. So if you're under withheld at the state level, the state will also apply a penalty to you. Sorry, hold on a second. So the next question is on state reporting. The question is actually, what do I need to do if I've not done any direct state filing in the past? So my short answer for you is, if you think that you have a direct state filing responsibility and you've been relying on CFS up till now, you probably should talk to internal counsel. But I will tell you what you need to do is you need to file directly with those states. It's your obligation to do direct filing if you have a situation where you are withholding or if you've got reportable amounts in those states. And we have a lot of customers, honestly, guys, who start the conversation with us as we've always done CFS and we thought that was adequate. And what we're unfortunately telling you is that CFS alone is not adequate for most complex financial services or insurance companies. And so the fact of the matter is you need to get into compliance as soon as you can. It is probably going to be an unpleasant experience to go into compliance, get into compliance the very first time. Because it'll raise a lot of questions from those regulatory agencies as to why you had not previously filed. So you should enter that conversation with eyes open, but you do need to do what you can to get into compliance. So so I'm going to hand it back over to Lauren. Thank you, everybody, and have a good day.
Great, thanks, Jeff. That concludes our presentation today. I do want to let everybody know that we have recorded today's event, and we also have a handout version of Jeff's slides that I'll also be sending out to everyone with a little bit more information. Now, some of our slides have quite a few pictures, but we will provide a handout version with a little bit more information. You can share the slides or the webinar recording with your colleagues if you're interested. We have recorded the additional questions that we've received today. We'll make sure that someone follows up with you to make sure you get your questions answered. So with that, I will close out today's webinar. And again, if you have any questions that come up, we're posting almost daily on our news blog, recent updates, changes that are happening. So you can check that out, and you can even subscribe and you'll get daily emails. Also on Twitter you can find us, as well as LinkedIn. We're posting a lot of our webinar events on LinkedIn, so you can find us there as well. And as always, you can visit convey.com if you have any additional questions and any questions about how Convey can help streamline your tax information reporting process. So again, thank you for joining us today, and have a great afternoon.